Welcome back, everyone, to another video by Fully Informed Trade. This is going to be the second part of February 2nd, 2011 market review. I'm just going to go ahead and review the remaining things that I wanted to review, which is going to be the crude oil market. Crude oil market does have an inverse head and shoulder. Inverse head and shoulder is going to be the most likely case scenario. You got this first shoulder corresponding to right here. You got the bottom shoulder. Not really the bottom shoulder, but the head corresponding to right here, which is going to be right here. And you're going to have another shoulder come up, which is most likely going to come up right here in the near future, which would basically translate into the crude oil market pulling back to around $89. Bouncing up, going back to the neckline, and retesting 93 and probably breaking it. Alright, now because of that, another thing I do want to point out, it might look like a head and shoulder pattern right here. Head right here, shoulder right here, and another shoulder right here. Only issue is that this shoulder does not correspond to this bottom. You need to have a honestly, if this was a head and shoulder pattern, this would need to correspond right around here. We didn't see anything remotely like that. Because of that, this is most likely an inverse head and shoulder pattern at this point, because a cup and handle pattern is no longer feasible, mainly because of the fact that we haven't been able to break above 93, so the cup and handle is pretty much out the window. Now let's go ahead and look at the next chart, which is going to be China Precision Steel. China Precision Steel is a play on Australia. Australia is getting hit hard, but it has already been hit hard by a giant cyclone, which is Cyclone Yasi, which is in Queensland, and pretty much that place has a ton of steel mills, a ton of coal manufacturing and stuff like that. The companies that would benefit the most from it are Chinese companies that do manufacture steel and steel products, which is going to be China Precision Steel. It is also an inverse head and shoulder. It is bouncing off the 50-day moving average, which makes it a great trade for myself personally. You would have some resistance at the 20-day moving average, but I don't think it will stop there. It could break above the 20-day moving average and continue to go higher. Another thing I do want to point out, though, guys, is that this is a relatively high-risk play because China Precision Steel isn't exactly the biggest stock on the New York Stock Exchange. It does have a limited amount of market liquidity, and I also want to point out the fact that since it's from China, we have no clue what's going to happen based on, there's a lot of factors that could play into this, but since it is coming out of the fastest growing economy in the world, one could only anticipate that this stock could bounce off of some news coming out of Australia and on the fact that it has some good technical reasons for basically making an entry into it. Now let's go ahead and look at the next chart, which is going to be Market Vectors Egypt Index ETF. Market Vectors Egypt Index ETF. I was shorting this market mainly because of what I heard out of the Cairo Square. Participants in the rally were fighting amongst each other. People wanted Mubarak out. Mubarak says that he's not gonna go for re-election, but nobody's assured of that. And also, maybe Mubarak might just put up his son for the next president. After all, tyrants are jerks. And he hasn't proven himself for the last 30 years, so nobody really trusts him. And I don't blame the fact that those citizens of Egypt don't trust their own president, because their president has basically sat on the throne for far too long and has overstayed his stay. Let's go ahead and look at the next chart, which is going to be S&P 500 VIX short term. Now I saw a double topping pattern right here, and I did short into this because of the fact that the Dow Jones Industrial Average was flat, as you guys can go ahead and see, and the dollar index was basically flat on the day's trading session. However, the dollar index is pulling back even further today. But on today's trading session, though, it was flat. The trend on the really long term is really negative still. And I'm going to go back onto the dollar index pretty soon, but I'm just going to point out what's going on right here. At first, it did go down, and then a lot of shorts did cover. I covered my shorts gradually, and I pretty much got most of myself out at around the 1760, 1765 area. But I saw this trend line. It was broken a bit, and it did. There was this bullish engulfing pattern that broke above this, which basically indicated that I would have to get out of my position, which I did. And I did see the EGPT continue going higher, but then it breaks below this trend line towards the last 30 minutes of the trading session, and then it breaks below this major trend line, which does indicate more negative weakness. It is bouncing off the 200-day moving average, but if it gets below the 200-day moving average, it could go substantially lower. Just keep that in mind, guys. Let's go ahead and look at the next chart, which is going to be what is it called again? Ford Motor Company. Ford Motor Company is another interesting play. What basically happened here was a bunch of people, sheep, hogs, pigs, cows, turkeys, roosters, whatever, a whole newsletters, basically recommending what George Soros was doing. George Soros messes up, Ford messes up, George Soros liquidates some of his position. The whole crew, motley crew of cows, pigs, bears, bulls, hogs, chickens, sheep, all follow, and they all sell together. And basically, it's this whole entire, herd of animals basically falling off a cliff together, including George Soros. And pretty much this market continues going lower on forward. And the more and more this motley crew of idiots continue to sell their positions because they were off the mark. And there's a lot of people who own it because George Soros owned it. This thing could continue lower, but chances are the support level is going to be somewhere around $13.50. So just be careful. Watch this level very closely, as it will be your area of support along with the 200-day moving average. These two areas are very similar. They're going to be very similar, and this is going to be a very strong area of support. Next chart is going to be Advanced Micro Devices. Advanced Micro Devices does break below the neckline. As you guys can go ahead and see, this is the neckline. It broke below it. I shorted it. I made a small profit off it at 1.5% or something. Not too big, but not too shabby either. And pretty much I made a pretty decent trade in AMD. Now AMD does have more room to the downside, mainly because it's broken between neckline basically, and not really neckline, I'm sorry. It broke through a flagging pattern, and since it's broken through a flagging pattern and it has an inverse hammer, there's much more room to the downside on AMD, and because of this we could basically conclude this is a dead cat bounce. Now as far as reviewing the dollar index is most likely going to continue lower on Chinese manipulation. Remember, as the Chinese constantly convert the US dollar into the euro because the euro Chinese yuan, euro does outpace the Chinese yuan. Chinese yuan easily devalues against the euro, and because of that, the Chinese would really want that, but in turn that also does weaken the U.S. currency. If that weakens the U.S. currency, that does benefit us at the same time from an economic standpoint, and it does benefit China, but it does give Europe the short end of the stick. Now another thing I do want to point out though is that the only place that we actually have a chance is basically on the Great Wall of China, which is the $76 level on this main trend line. If we can't hold our support here, the Chinese army of US dollars will basically the Chinese army of US dollars will break below this level and continue to the downside. So just watch what China does, and chances are, that's the only area I can honestly think of from a technical standpoint that we actually have a chance of stopping this market from going lower. That does it for me for today, guys. If you guys are on YouTube, please be sure to subscribe to my videos, because I will have more stuff for you guys in the future. If you're on Facebook, tell your friends about me so they too can learn more about stocks, commodities, bonds, and Forex. And if you guys are on Twitter, please be sure to retweet my tweet, which is my link to this video, because it does help to have more people learning more about these markets. And if you guys want to have access to the same charting software that I use, just check out the link below this video, because it does help having a trend indicator, basically telling you the strength or weakness of a trend does take the guesswork out of it. That does it for me for today, guys, and I'll have more for you guys in the coming weeks and months ahead. Take care.